I just found 3 penny stocks with huge upside potential. One is already up 43% but could double, and another one is trading for less than its breakup value. In this video, I'm going to show you how I find penny stocks and reveal the 3 best stocks to buy right now. We're talking best penny stocks to buy today on Let's Talk Money.
Beat debt.
Make money.
Make your money work for you.
Creating the financial future you deserve.
Let's Talk Money.
Joseph Hogue with the Let's Talk Money channel here on YouTube. I want to send a special shout out to everyone in the community. Thank you for taking a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. We haven't talked much about penny stocks on the channel, but it's an investment with huge upside if you're ready to take that risk. In fact, a stock I recommended in July last year is already up over 174% in the last 8 months. In this video, I'm going to take you through exactly what I look for to find the best penny stocks, from the stock screen I use to the deep research. I'll then reveal 3 penny stocks I've been watching that could be the best investments of the year. I do want to warn you though, like I said, these penny stocks and micro-cap stocks are extremely risky. You can lose everything just as easy as it is to see that 2 or 3 times return on your investment. Because of that, I wouldn't recommend having more than maybe 10% of your portfolio in these stocks. Now this is why I'm starting the video off with the process I use to find penny stocks. It's not enough just to drop a few stock picks. I want you to be ready with the knowledge of how to find these opportunities and be able to avoid the risks. Now, penny stocks can offer some great opportunities though, because they're not widely covered by analysts like the Amazons or the Apples in the market. There are over 41 analysts covering Amazon. That's 41 Wall Street analysts spending their nights and weekends digging into the financials, calling contacts and suppliers. There just isn't that much new to be discovered. In fact, the average earnings surprise for stocks in that large cap S&P 500 is just 3.5%. That means analysts are off by less than 4% predicting the future profits for these companies. Compare that to an average surprise of 11% on penny stocks, and it's clear that there is just more opportunity in these smaller companies. Now, looking for penny stocks, I'll usually start with a basic screen to narrow down the list. Now, I'm using Morningstar here, but just about any online investing platform is going to have a screener that you can customize. I'll start by filtering for stocks with under 750 million in market cap. Now, this might not seem like a penny stock company, but it's extremely small when you consider the average market cap in the S&P 500 is $229 billion. Then I'll filter by revenue growth and operating income. First, I like to see that the company is growing sales, but more importantly, I want to see that it's growing its operating income faster. So maybe I'll put in the revenue growth of greater than or equal to 5% and then greater than or equal to 10% when I filter for operating income growth. Since operating income is the sales minus costs of goods and minus all those operating expenses, if the operating income is growing faster than sales growth, it means the company is also cutting some of those costs. That means it's getting more profitable, more efficient, even as it's growing sales, and that's a great sign for these smaller companies. Now, one last thing I'll screen for is cash flow from operations. Most investors get hung up on earnings. It's what everyone talks about, and everything you see is about these earnings and profits. What's more important though, and this is what professional analysts look at, is cash flow from operations. You see, there are all kinds of ways a company's management can manipulate earnings or profits. They can delay some expenses or book some sales early, anything to make the earnings look higher than expected. It's all accounting gimmicks on that income statement. Now, the statement of cash flows, that's actual cash coming in and out of the company, and it's much harder to stick lipstick on this pig. If a company isn't doing well, but it's using all kinds of those accounting shenanigans to make itself look profitable, you'll find it in the statement of cash flows. So I'm back in the screener and I scroll down to cash flows, and I'll just filter for companies with cash flows from operations in the most recent year that are higher than the previous year. This tells me the company is growing actual cash from the business year over year. I can also carry this back further, like filtering for higher cash flow in year 2 over year 3, but we'll just keep it to this one filter for this example. Now, that simple stock screen still left us with over 140 potential penny stocks, so I'd probably play around with the filters a little bit till I got to maybe 30 or 50 stocks. Then I'd go on to my fundamental and catalyst analysis. Now, we won't get too far into that fundamental analysis or the catalysts I look for, because I want to get to those 3 penny stocks I found while researching for this video. If you want me to make a video detailing my fundamental analysis or other ways to pick stocks, let me know in the comments below this video. Basically, fundamental analysis is just looking deeper into those cash flows and other financial statements. It's looking at the industry in which the company operates and what advantages it has over its competitors. For example, in fundamental analysis, I'll first look at to make sure that cash flows from operations and net income are growing at around the same rate each year. This is an old school analyst trick to see if a company's management is trying to play shenanigans with the income statement. Net income growing at a slightly faster rate than cash flow, as in the case of Apple here, might not be too much alarm, but it does signal some accounting tricks that management is using to make the profits look better than they might actually be. Now, if net income or earnings are growing much faster than actual cash flow, it's a warning sign that something is fishy in the accounting. Beyond looking at those financial statements, I'll also look at some of the valuation methods like price to earnings or price to sales. One important warning here that we've talked about before on the channel is that when you're comparing stocks, you absolutely have to compare stocks within the same industry. It does no good to compare price to earnings ratio for tech stocks against the ratio on a bank or a telecom stock. Industries just have different characteristics like growth and debt, so you have to be comparing apples to apples. You want to find the best of breed within each industry. Don't try to find the very best stock across every industry. Finally here, before getting to those 3 penny stocks, is that I'll look for a general catalyst. This is an event that could move the shares big time over the near term. Whether this is the potential for a takeover or a big project to be announced or just a change in the overall supply-demand picture. You'll find some solid companies and some stocks that we've covered to this point, and they'll be good long-term investments. Finding that near-term catalyst, though, just means that you've got a better chance of seeing a quick return rather than waiting a few years. Using this filter and the analysis that I've done, I've narrowed the list down to 3 of the best penny stocks to buy right now. Strong companies trading for under $1 per share or under that $750 million market cap that could be about to take off. Our first penny stock is Eldorado Gold, ticker EGO, a $690 million gold miner with 11 major projects around the world. Now, Eldorado has assets in Canada and Brazil, but the majority of mining is being done in Eastern Europe, Turkey, and Greece. Management recently reported its 2018 performance, producing 350,000 ounces at an operating cost of $650 per ounce and an all-in sustaining cost of $994 last year. They guided up to 420,000 ounces this year and up to 550,000 next year. Not only is production expected to boom as much as 57% over the next 2 years, but costs are expected to come down at least 10% to an all-in sustaining cost of $800 to $900 an ounce this year. So you've got a good medium-term picture on the shares, and they're up 43% so far this year, but this stock still trades for a price of about 1/5 its book value. That's about 1/8 of this 1.73 average price to book value for the other miners in the group. The big overhang on Eldorado has been its Skouries project in Greece, which has been constantly delayed on permitting by the government. The company has won a couple of arbitration agreements and the government is supposed to be getting out of the way, so if the company can get that worked out, it could mean a big jump in the shares. So I've been following Eldorado for a while and we'll get to those next 2 penny stocks, but if you like this video and you want to see more like it, tap that thumbs up button under the video to let me know. Our next penny stock is Precision Drilling, ticker PDS, a $724 million leader in North American oil and gas production. The company reported an excellent 4th quarter with revenue 12% higher as well as profitability gains. Drilling in the U.S. increased 15%, with the company reporting a 5% increase in rig count versus an average increase of just 2% for competitors. Besides the 240 drilling rigs and 210 service rigs it has in North America, it also has 17 drilling rigs internationally in Saudi Arabia and Kuwait. Precision is in just about every major field development in North America and controls more than 1/5 the land drilling market in Canada. The United States passed the Saudis and Russia last year to become the world's largest oil producer. Sanctions on Iranian and Venezuelan oil will keep prices higher and could even drive crude further this year. Now, debt has been an overhang on the shares with almost $1.3 billion in long-term debt on the balance sheet. The company has been aggressively paying this down though, retiring more than $330 million in the last few years and has no maturities until 2021. That means a lot of financial flexibility and an improving debt picture for the next 2 years, and it could mean a catalyst for these shares. Our third penny stock is the smallest of the group, and frankly, when I was a full-time analyst, I probably wouldn't even have considered it. The big fund managers I worked with needed to place hundreds of millions in investments and didn't have time for these smaller companies. I love being able to talk about it here on the channel though, because Main Street investors can use this as an advantage, getting in on the companies that fly under Wall Street's radar. So our third penny stock is Amira Nature Foods, ticker ANFI, a $57 million packaged food leader in specialty rice. Rice is the primary staple food for over half the world's population, with more than 512 metric tons consumed annually. The industry is extremely fragmented, with the top 10 brands controlling less than 13% of the market. So this is an industry with a lot of room for consolidation and where bigger players can get an advantage. ANFI books half of its sales within India and another 44% in emerging Europe and the Middle East, but has a distribution agreement with Whole Foods and Costco to sell in the US market. Emera is an extremely small company, but what put it on my radar is that it's a net current asset value stock. You might remember we talked about the NCAV in our video covering strategies from the book The Intelligent Investor. This is where a company's current assets, so just its cash and receivables that can be converted quickly to cash, are more than its liabilities, both current and long-term. Basically, it's a liquidation value of the company. Now that's $492 million in current assets minus $294 in total liabilities for Emera, so a net current asset value of almost $200 million. Now when we compare that to the total value of the shares traded in the market and a market cap of just $57 million, you see how there could be some huge potential value here. Basically, someone could buy the company for under $60 million and sell the assets for $200 million. That's something that can bring out big corporate buyers, and it could mean a big jump in the shares. Now, there's a lot of potential in those 3 penny stocks, but don't miss those 3 investing strategies I shared in our Intelligent Investor review. This is the book that Warren Buffett called by far the best book on investing ever written. I'll leave a link in the video description below and a card up in the corner of the video. Also, make sure to let me know in the comments if you want to see those videos on how I pick stocks from a fundamental analysis perspective. We're here Mondays, Wednesdays, and Fridays with the best videos on beating debt, making more money, and making your money work for you. If you've got a question about money, just subscribe to the channel and ask it in the comments below. We'll make sure you get an answer in a future video.